So my name is Jay Giraud, founder at Damon Motors. Damon was founded in 2017 after a rather eye-opening experience I had in Jakarta, Indonesia, which is a city of 22 million people who ride motorcycles every day. And as much as you could probably imagine, the sheer volume of traffic, of people, of congestion on the road in any of those kinds of countries, could be Mexico City, it could be Rio de Janeiro, it could be Kuala Lumpur, cities in Malaysia, Taiwan, obviously many cities in China, and many parts of the world where congestion is a real problem. I had myself an experience of riding a motorcycle among these 22 million people in Jakarta, and was finding myself having to dodge motorcycles and dodge bicyclists and dodge big trucks and dump trucks and buses and things like that. And I thought, wow, this is not the kind of experience I expected. It was totally overwhelming. And you have to know that I was looking at this problem of sheer congestion from the point of view of who I declared myself to be in life. And who I am is transportation transformed. I made that declaration in 2003 at the tail end of my career as a professional snowboarder, and realized that the world is not sustainable in the way that it's going, and it would be a worthwhile life of mine if I dedicated it to helping get the world off oil. After 4 years of researching all forms of alternative energy, from hydrogen to electrification, E85 ethanol, solar and wind, and all those different forms of alternative energy generation and consumption, I concluded that the best way forward for the world was for people to dramatically increase their relationship to themselves as energy producers or energy consumers. Mostly, of course, we are energy consumers in the world. And I came to that conclusion because I saw over the last 100 years, if you look at the growth of the human population, it very accurately mirrors the growth of energy consumption. And of course, the growth of energy consumption came when we stopped using things like steam and started using things like oil. And oil, of course, being converted to energy, to electricity, or coal to electricity, and all these forms of massive, dense energy creation that we were able to get out of the earth. So, of course, we have to do something about that. And electrification seemed to be the most efficient way to convert people's use of energy. And of course, the thing that we use the most besides energy in our home is energy in our cars. So in 2008, I founded a company called Rev Technologies. We built electric pickup trucks and SUVs. We shipped these vehicles to the U.S. military, to U.S. utility companies and municipalities. And we built an internet system where all of the vehicles could be cloud connected. And we could not only charge these energies from the power grid, but we could reverse the energy flow back into the power grid or into buildings and other military systems around these vehicles that needed energy at any given point in time. This had a profound effect on the consumption of diesel fuel on a military base, or on the ability to increase the balance and absorption of solar and wind on a given city's power grid throughout the United States. So that's a little bit about me and why I was looking at this situation in Jakarta in the summer of 2016 as one that needs to be transformed. And as somebody who says, I'm going to dedicate my life to transforming transportation, and in front of me, here are 22 million motorcycles all over the road, consuming fuel, of course, and people are avoiding each other and trying not to get into an accident. I thought this is rather incredible. This is 15 years later from when I made that personal declaration. And I don't think anybody's dealing with the motorcycle problem the way, say, Tesla is dealing with the car problem. And if you look at the adoption of technology in the motorcycle space, it lags cars by a solid 20 years. Of course, every average consumer on a motorcycle is certainly concerned about emissions and noise, but they're much more concerned about the personal safety. Now, in North America and in Europe, perhaps, much of us who use motorcycles, we use them for fun. We take on that level of risk in exchange for the thrill of adventure and excitement. But for the vast majority of the world, 1.5 billion people, the motorcycle is sure, it's fun, but it's actually a necessity as well. It's an economic necessity for every individual and every family member. to get from A to B safely in order to get from home to the factory that they work in or whatever kind of work they do. And the motorcycle companies that we know of today are not doing anything about the problem of emissions and safety for 1.5 billion daily commuters. I learned that motorcycling represents the largest form of transportation in the world. At 44% of commuter miles traveled worldwide, they're conducted on two wheels. So this became a pretty profound problem, the intersection of safety and the elimination of emissions. And to think about that problem, we had to start to think about the complete reinvention of the motorcycle itself. Now, when you introduce new technologies, of course, you probably know that it takes, economies of scale to get to anything wide enough and large enough to make a real meaningful, lasting difference in the world. And new technology is expensive, so you don't have economies of scale at the start. And so that's really the reason why over my shoulders here are two very high-end, very high-performance electric motorcycle prototypes that we developed, very much like Tesla. These are our halo bikes. We start at our tip of the spear that's going to carry in the kind of technology that we can one day proliferate down into the mass market of low-cost, high-volume motorcycles, so that we can not just make recreational motorcycling safer, but make transportation safer for hundreds of millions of people one day. So that's a very quick tidbit on the foundation of Damon and why I founded Damon. And where does that take me? Well, I guess it takes me to fundraising, because none of it's possible without the enrollment of hundreds of investors who get behind an idea to make something important better or safer or easier or more fun. It could be an entertainment company. It doesn't matter what it is. If you want to start something, you've got to raise money. And raising money may be the hardest thing I've ever had to do in any of my startups in my career. And it sort of gets easier with time, but not really. You can have a great track record. You can have exits under your belt. You can be a been there, done that founder and CEO, but every single new idea you bring to investors necessarily is scrutinized by those investors who want to know you know what you're doing, that you have a market, that you have protectable technology, that you can create and maintain a defensible moat between you and your competitors, that your market's not a sunsetting market. It could be something that's nearing the end of its life cycle. And there's just an endless list of criteria you have to meet to satisfy investor demand. And all those things make sense, right? If you were an investor, you'd be thinking the same way, but none of that really matters if you don't have momentum. There are a few, investors or maybe people well who are willing to put some money behind you because they like you and they believe in your idea and they love your passion per se. But that doesn't create momentum. You have to get very good at somehow getting the rock to roll down the hill and creating a kind of feeling of this company is taking off with or without those investors that you're in talks with, or you find yourself dragging your feet for a long time. And so as an entrepreneur, if you're an entrepreneur or a startup founder on this presentation, I'd say your perseverance matters more than anything else. And that may take more sacrifice than you're willing to make, may take more of your time, more of those hours that you'd like to sleep and live a normal life and, get some exercise and see your friends and all of that. But none of that matters if you're going to make it. Your perseverance is more important than anything, I think. And some people say, well, it's important to maintain life balance. Well, balance is what you call it. For some people, balance is sinking themselves entirely into a company because they believe in the mission that they're out to cause change for, more than they believe in seeing their friends or more than they believe in going to the gym. Although you should make sure you go to the gym. So, I've been hard at work at Damon for the last 4 years. I've been hard at work at my previous startups, Rev Technologies and then Mogio, which is a very successful company. It's the number one connected car platform for consumers in the world, distributed in 11 countries by 9 carriers worldwide. And for me, balance is sinking myself into something I believe in and putting endless hard work into it and feeling like I'm making a difference in the world, and that maybe I'll get to leave something behind that will last longer than I do. So when you're working on your investor pitch, and you're working on on creating that unstoppable momentum to attract investor capital into the company, you have to know that every single day is one tiny foot in front of another, and it really feels like you're not going anywhere sometimes. And many of you who probably had a startup in 2020, you know exactly what I'm talking about. 2020 being easily the hardest year I've ever had for fundraising and building momentum with a startup. And each day didn't feel like we were making much progress. But when I look back on the year, I'm absolutely blown away at the progress we did make. What felt like forever, suddenly a year, when you look back on it, feels like it went by quickly. And here we are at Damon with an order book exceeding $20 million in orders for this motorcycle here. Credit card backed orders. We amassed over 1 billion media impressions. We won 7 awards for the best of automotive innovation, from Robb Report to Popular Science to the best of CNET, the best of Digital Trends, the best of CES, and a couple of others. And we grew our management team by 2x. We grew the company staff by 2x. We tripled the size of our patent portfolio, and none of it felt like things were moving fast enough, and none of it felt like we had real momentum. But a year seems like a long time when you're in it, but when it's past, it's suddenly, the sum total of things is pretty incredible. So maybe make sure you slow down and enjoy your small wins along the way, and you got to learn how to really carry all of those and be public about them and make as much noise as you can, and tell your story with all those key metrics as often as you can. And anytime a metric changes by 1%, make sure that you update your slides and you constantly, update your investors that things are moving along. And so creating that momentum that you need to fundraise has a lot, if not everything, to do with your ability to communicate frequently and powerfully, and tell your story and wear your achievements proudly and outwardly to that investor community that you're communicating with. You can definitely do it too much. So don't, overwhelm investors, but make sure that you're constantly following up and you manage a pipe that allows you to not let people slip through the cracks, because you never know which person is going to make a tremendous difference in bringing a network of people and suddenly creating that groundswell momentum. So very soon you'll hear about a board member of ours we just added. He's an old friend of mine. I've known him for 13 years building startups in Vancouver. He recently moved back to Vancouver. I had no idea he was going to bring in the lead investor to our round that recently got us, well, I'm not going to mention it yet because the press release isn't out, but a huge funding round done by a lead investor who collectively, these guys brought in a network behind them who absolutely loved the story. They loved what we were trying to do for the world. They're social impact investors. And after turning over every single rock there was to turn over in 2020, or at least it seemed like we did, suddenly we had that momentum we were looking for, and all of the aggregate increases in our social media following, in our order book, in our patent portfolio, and our management team, and so on, led somewhere. It got us to that momentum that we needed. And of course, now we're just off to the races and already doubled our team size again since then. So it's a little bit about fundraising, and a little bit about perseverance, and a little bit about communication, and all those things matter a lot. And a little bit about balance, if you want to call it that, balance in whatever areas of life matter to you to be balanced in. And you've got to build your advisors, and you got to build your board members, and you're going to be getting a lot of advice from a lot of people. If you're managing a list of shareholders that could be 100 people long, and everybody's got lots and lots of experience and lots of things to say, it's important to really have a clear vision and a clear strategy for that vision. If you don't, every bit of good advice will sound like advice you should take. And I cannot emphasize this one enough. There's a lot of great advice. It's always great advice. That doesn't mean it's right. And, for example, in the automotive space, it looks like a huge hill to climb to beat Ford or to beat Tesla or to beat some big company in the automotive space. And therefore you should do it underneath one of their wings, have a big brother. It's what investors like to say. You should have a big brother, a big strategic partner. I could not disagree more. These big companies, Tesla is a different one. We'll leave them aside. But big automotive players, be they Yamaha or Ford or General Motors or Citroën or whoever, they have such extraordinarily large bureaucracies that as much as they want to do big things, besides write a check into your company, which would be great, they cannot help but put their hands in the pie and make your product roadmap their product roadmap. And their product roadmap is necessarily an incremental one, but you're not going to win the game of disrupting anything by being incremental. So, there might be a time when you've got 1,000 vehicles on the road or 1,000 of your products on the road, but rarely does a big strategic partner who's doing things the old way, extremely rarely, does it make sense for you to take their money or to take their support. The vast majority of investors will tell you should, and the vast majority of investors will tell you that makes sense. Investors want their investor money to be de-risked. And, Ford on your slide deck looks like a great way to de-risk your business, but it's de-risking the early days, but it's creating massive risk when you try to get to market. And so you're going to have to be pretty crystal clear on what your vision is and what your strategy is, and maybe more importantly, what your strategy isn't, in order to know how and when to say no to good advice, in order to know how and when to say no to what looks like good partners, especially those strategic partners. There is, in some companies, there's a right time and place to take a strategic partner. Usually it's not before you're in the market. So when it comes to, building up your social influence around you, your professional influence around you, you've got to communicate with advisors and shareholders a lot. And it's really key to listen to them, because if anything, they force you to evaluate things again and again and again and again. And sometimes it helps you crystallize and firm up your vision and your strategy. And sometimes it helps you pivot it. But you got to know the difference between when to do one and when to do the other. So boy, what else? There's some good questions here about building up a business. What were the critical things that I did right? Turning points from startup to exponential growth. I don't know if we've achieved exponential growth yet. We got a long way to go before we get to exponential growth. Maybe when we're at 100,000 vehicles on the road, I would say we have exponential growth. And when it's doubling every year, we're not there yet. Critical things that we did right. There are, in the motorcycle world, and probably very true for the car world, there's a lot of companies right now. Many of you might be buying stock in SPACs and following the EV space, the electric vehicle or the hydrogen vehicle space, and there's just a lot of products out there. There was a generation about 13 years ago when I was in electric vehicles, and a lot of the startups coming out had pretty radical looking vehicles, and everybody wants to be the future of something. Well, the general public who buys cars and motorbikes and any product, and the people that are creating them are pretty miles apart. Great designers can come up with really exciting things, but the one of the things we did right is we did not make our motorcycle too futuristic looking. That orange bike is a Honda from 2017, and the yellow bike is a Damon motorcycle, is a Hypersport, and they have, their silhouette is very similar. Their look is a bit different, but the silhouette is very similar. So one of the things we definitely did right, which is absolutely why we have a $20 million order book today, is we made a motorcycle look familiar with the bikes you can buy today. It's not trying to be too far out there and too far fetched or too odd or weird. It's familiar and it's friendly and it's approachable to people that buy sport bikes. So that's a really key thing. You can get to your Cybertruck one day, but Tesla didn't start there either. Tesla started with a Lotus vehicle that, came from Lotus. So it was already a familiar looking roadster. And then their Tesla S, well, that could have been Aston Martin if you put an Aston Martin badge on it. It wasn't too futuristic to be, something that people can't relate to. But by the time Tesla got to their fifth vehicle, the Cybertruck, you can hate it, you can love it. I hate it and I love it. But it's something that they have earned the right to push the envelope on design now. They didn't start there. So I think that's a really important thing when you're coming up with new products, that you want to capture as much market share as you can, or you're not going anywhere. And so make your designs a little bit risque, but make them familiar and friendly too. What else? What are the biggest gains learning from 2020? Whew. Biggest opportunities looking out to 2021. The biggest gain from 2020 was staying alive. during 2020. I don't mean that literally, pardon me. I mean that keeping the company afloat, keeping the company running. There's certainly hard times. I think twice in 2020, everybody at Damon took a pay cut to make sure we made ends meet, that we could keep the lights on, literally, that we could get to the events we needed to get to before, things were locked down here in Canada, that we could continue to invest in PR and marketing and pushing to our next prototype, no matter what it took. And it took an incredible amount of enrollment. I talked a lot about communication earlier. Communicating with your staff matters as much as it does to communicate with the outside world, and making sure your staff understand why you're changing tack here and changing tack there and pausing this and focusing on that, turning down some of this so that you can do more of that. And making sure your employees are strapped into the roller coaster ride, and that they believe in it and they understand why you're doing all these twists and turns to get to where you need to go. Because you're not going to get into 2021, for example, without them. So I'd say one of the biggest learnings from 2021 was you have to apply that perseverance and that crystal clear and focused communication strategy, not just to shareholders and advisors and investors, but to your employees as well. I don't know, probably 120% of my time is spent doing communications with people, and just, tweaking people's focus on this, tweaking the strategy over there a little bit. So that's a key factor to it all. So yeah, we are in Canada, and I've built 7 startups in Canada. And there have been many moments in my previous startups when my investors or, employees are asking, when are we going to move to Silicon Valley? I'm really, really glad that we never did. I'm really glad. Sure, there's a lot of good things about Silicon Valley, but there's a lot of things that are not good about it as well. And one of the things that I think I learned in Canada is, because it is hard to fundraise when you're outside of the Valley, especially in a small country like this, learning again, perseverance, learning to be really frugal with your dollars, knowing how to apply ingenuity and creativity in the absence of money, which often is just thrown around when people raise humongous seed rounds and humongous Series A rounds in the Valley. They have too much money and not enough creativity and grit to get things done. So Canada has pretty good advantages as a startup. We have pretty significant grant funding programs, R&D rebates, and tax incentives in the country. No trade tariffs for manufacturing and exporting out of here. Canada is a big manufacturing country, and it's a great R&D place as well. It's got incredibly loyal talent, tons of clean tech manufacturing and clean tech R&D, telematics R&D talent, a lot of great engineering, not a lot of great marketing know-how. So you might want to import some of that. But aside from the capital raising challenges, I'd say this is a great place to create a company, and I'm glad I've kept Damon inside Canada. So it's great talking to everybody here. I hope this has been somewhat enlightening and helpful, and I'd be happy to chat with anyone if they want to reach out to Damon Motorcycles is DAMON.com. Please follow us on Facebook or Damon Motorcycles on Instagram. And if you want to reach out to me, I'm JAY@Damon.com. It's been a great time chatting with you guys at Emergence 2021, and I hope to hear from you soon. Thank you very much.